In this episode, we speak with Alexander Gorokhovskiy, Managing Director and Head of North American Corporate Direct Lending and Venture Debt at Deutsche Bank Private Credit and Infrastructure, or DB PCI. DB PCI provides financing, structuring, and risk management solutions across 4 product verticals: corporate direct lending and growth debt, fund finance, digital infrastructure and appraisable assets, and infrastructure and energy. Together, these complementary businesses offer flexible financing solutions across the capital structure, including customized terms and product structures. Alexander's responsibilities span underwriting, structuring, portfolio management, and syndication across DB PCI's principal lending activities. DB PCI was recently recognized as a top private credit firm of 2025 by GrowthCap. I'm your host, RJ Lumba. We hope you enjoy the show. If you liked the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Alex, great to see you. Thanks for taking the time.
Absolutely. My pleasure. Thanks for chatting with me.
This is the first time we're having Deutsche Bank on. Obviously, the folks know Deutsche Bank. It's in everyone's knowledge base in terms of large financial institutions. But there's so many different pockets of Deutsche Bank. And I actually did a very short stint, a year in a pocket of Deutsche Bank. But tell us about where you sit and your group.
Yeah, totally. So I guess to your point, Deutsche Bank is a global investment bank operating for over 150 years across 56 countries. And we have about 90,000 people working across the world. I work in a group called Private Credit and Infrastructure. This particular pocket was formed to support clients with capital that wasn't otherwise efficiently available in the market. And we do that across 4 verticals. One is digital infrastructure. So think fiber, data center is an enormous business for us. Traditional infrastructure, so solar, wind, power, assets of that type. And then we have a fund finance business, which has been top of mind for a lot of platforms, where we're supporting alternative asset managers with capital on the investments that they've already made. And last but not least is a business I oversee called Corporate Solutions, where we are supporting smaller, middle market, and larger companies with financing solutions. The board of business is run by a gentleman whose name is Frederick Rosenberg.
Excellent. The corporate solutions, it seems like that is a segment that many firms are operating in. There's a lot of private credit going towards that segment. How do you differentiate Deutsche Bank's offering, or maybe it's not that differentiated and you're really promoting the breadth of the kind of Deutsche Bank ecosystem, which is the value add there?
It's interesting because we've been doing this for a long time. And the reality is market has changed almost every year. And that's probably been the most fascinating part of the business, because when we started out, there was this huge disparity with traditional first-lien capital broadly available and mass capital broadly available and nothing in between. And with more capital formation, there's been less and less opportunity to differentiate where and how you attach to businesses. And then as market evolved and AUM has grown across some of the largest managers, actually some of the smaller balance sheets had become less addressable, because a deal under $200 million is possibly less interesting in AUM terms for a really large credit fund. And we've constantly adjusted to the market to try to support, and I guess that's the most important part of our business. We're not looking to maximize AUM. We're looking to partner with management teams, owners, operators for long term. And it varies where we're most impactful. The other thing that's been really differentiating for us is, we are a global investment bank, so we could finance and support businesses across the world. We could also give them access to products that they may otherwise not have access to. So letters of credit is a bank product, FX hedging, rates hedging, access to market insights, industry expertise, and the list kind of goes on and on.
Are you and your team, are you directly sourcing? Does some of the sourcing come from other folks in the bank, investment bankers who have clients?
Yeah, it's one of the most important things as we were building out the business has been building trust. And that building trust is both internal and external. And then as everyone's recognized the reliability of the business and of the platform, we're seeing deal flow from everywhere. We're seeing deals from our sponsor banking colleagues, industry banking colleagues, corporate bank, private bank. We're seeing it from other credit funds. We have direct origination and distribution teams dedicated to our broader business. And frankly, a lot of repeat business, financing and transactions that we've executed with management teams that move to other opportunities or investors that transition into other roles, have been a constant, reliable source of deal flow for us.
Do you ever have situations where a CEO or a management team will call in directly or somehow get in touch with you folks directly?
Yeah, it happens all the time. Sometimes there was a Fortune 500 leading CEO that struck out on their own, right? And they had familiarity with the platform and they were calling in for support. Sometimes it's someone through deep industry expertise and connectivity that's coming in. And in fact, as I look at our business, it's interesting. When we were starting out, it was predominantly non-sponsored. And as I look today, it's kind of more traditional business mix with 80-20 sponsored, non-sponsored opportunities that we're supporting across the portfolio. And that's sort of consistent with CEOs coming to us to support their businesses.
Mm-hmm.
Actually, the other thing that's interesting with the CEOs, there's greater longevity. Those guys, until they exit or retire, continue to really lean on the institution that they trust.
And then from a macro picture, I guess, do you see kind of this increasing both number of sponsors as well as sponsors with growing AUM? And as such, you have these tailwinds to your business.
Yeah, I think private markets overall have continued to grow and outperform, both in terms of recorded IRRs and AUM, multiplying many times over in recent years, for better and for worse. I was reading a stat somewhere where there are now more investment firms around the world than there are McDonald's. So private equity firms that are McDonald's in the United States, which is a fascinating stat. And the reality is the world is growing, the population is growing, and the business need is growing. Some managers will be more successful than others, but I don't think the opportunity or the need for financing and partnership ever goes away or diminishes.
Mm-hmm. Are there certain sectors that you're more focused on within corporate solutions, or are there some sectors that you find you're putting money towards more than others?
Our underwriting is consistent across cycles and across environments. We always have the same framework. We want to ensure there's enough free cash flow. We don't want to give a company too much money and then have to face challenging conversations later. And because our underwriting is the same, we kind of pursue the opportunity set in the same measured manner. However, the market, I find, year over year really changes around us. Sometimes people are really much more aggressive around software. Sometimes people are much more aggressive around healthcare. Sometimes the market goes wholesale the other direction. And so what I find in a normal course, we'll execute across all sectors and end markets, given our industry expertise and access, but will be more impactful and overweight on the opportunities where we're getting deals done in which people are actually moving away from. So if I had to project for 2026, I suspect, relative to last year, we'll probably do more in healthcare and software.
Mm-hmm. And do you find that if we took a look at kind of the types of investments you've made, that you have a high degree of structure that you employ in your deals, how could we think about you as a private credit investor in the whole scheme of, like, some folks are kind of highly engineered in terms of financial structure, some are more vanilla?
We could go either way. We could support the company with traditional first lien, with unitranche, with split lien and mezz capital. We could support the company with LCs. We could support the company with more structure and less structure. It's kind of what is appropriate for the opportunity set.
Mm-hmm.
I think that's what it comes down to. Is what is most appropriate for the opportunity set, as opposed to saying, we will do the same thing over and over and nothing else fits.
Got it. And then in terms of PCI's balance sheet, is that coming from Deutsche Bank? Do you have external investors Do you have a different sleeve of capital that's offered to retail?
Actually, this is a perfect question because the business is entirely capitalized with bank balance sheet capital.
Mm-hmm.
And that's actually fairly unique and constructive characteristic and has been for us and a source of differentiation because we're not subject to fund formation. Like you're never doing a deal with us and then 3 years later discover that the transaction is sitting in an old vintage fund that doesn't have access to additional capital, or it's second half of 2022 and everyone is concerned about liquidity and stops writing new checks, or it's the middle of COVID where there's concern. We've been able to constantly support businesses, and that's been a tremendous source of differentiation. The other thing, because it's bank capital, we don't have a stated MOIC or an IRR requirement. We could do a bridge financing for a business, and we could do it efficiently. And we could do lower spread deals and we could do higher spread deals because we're not solving to a particular benchmark. We're solving to, first and foremost, doing good deals with good partners and ensuring that it's good risk.
And going back to the original part of the conversation, just to better understand your group, I'm sure it's existed in different forms, but has it been, and maybe this is just lack of my knowledge, did the formal group of this private credit and infrastructure PCI, did it come together more recently, or has it really been around for a long time and there's always been a dedicated team?
So I could speak from my experience within the bank. I started in the predecessor group in 2009, and there was this market transition with regulation and opportunity set to support businesses in a lending capacity. And really the current management team that has been overseeing and driving business came together around 2015 and has been leading this particular platform ever since.
Excellent. And in terms of the team structure, primarily folks are in New York, or is it really equitable, like spread out throughout Europe and other parts of the world?
So Deutsche Bank has similar groups throughout the world, naturally. My team is exclusively focused on North America, and so we sit in New York.
Got it. And then let's learn a little bit about you. I think you've been at Deutsche Bank, what, for 2 decades, over 2 decades?
I've been at Deutsche Bank for 22 years now.
Amazing. I'm always amazed at the longevity of folks in banking because it's a tough business. People come and go, but tell us about your path. So right out of undergrad, you go into banking?
So I guess maybe taking it a little bit further back. I was born in Ukraine. I immigrated to US in 95. I was really good at math. I went to school, and in the late 90s, early 2000s, if you were good at math, you were doing computer science. So I actually started and focused in technology. And I started in technology graduate training program at DB and learned about sales and trading purely by coincidence. I didn't know this division or this market or investment bank existed until 2006. And when I did, I knew that that's what I wanted to do. And so I embarked on retooling and transitioning to an investment bank or markets role. And I started sort of first working in emerging markets, then having a number of other roles, and ultimately lending on the predecessor desk or business in 2009. And I've had a number of roles since, overseeing liquid secondary trading, financing businesses, and I raised my hand around the opportunity for corporate direct lending around that sort of 2015 with the new management coming in place.
Mm-hmm. Well, you're in a very exciting area, I think, across the board, across Wall Street, this area of alternatives, and in particular, private capital is a focus area. Where do you see both the broader PCI business or corporate solutions vertical? Where do you see it heading? Do you think it's kind of tremendous growth over the course of the next 3 to 5 years? What do you think is going to pan out?
Yeah, I always have a crystal ball on my desk, and I'll tell you, I'm mostly wrong. So one of the things that we've done well is that we've never really, even as opportunity expanded, we've taken a very measured approach to growth and tried to be incredibly consistent in how we embark and conduct ourselves. And frankly, I think it's been a source of strength.
Mm-hmm.
Reality is the market is so tremendously large, and our attachment to the market relatively is so small. And we're not trying to become a $1 trillion asset manager. We don't have such aspirations. We just want to partner with great companies and do great deals. And so I suspect that positions us well to continue to grow with the market or take a little bit of market share as things kind of move around. One of the dynamics that played out, particularly over the course of the last 1 to 2 years, has been outperformance on credit fundraising relative to the opportunity set and M&A market. And so there's been this technical imbalance between number of dollars that are pursuing the opportunities and the opportunities that are available. I'm optimistic that those trends will stabilize and balance in a more balanced manner, where companies will have access to lots of different liquidity solutions, but it'll be a much more balanced position. And that alone, I think, is going to create a lot of really good opportunity. And then, you're seeing a lot of headlines across countless sectors, which is driving concern. And sometimes that allows us to really be supportive where the opportunity or the businesses are really robust, but structurally, because of the headlines, some institutions are moving away from them.
We're coming up on time. I have 2 final questions. These are my standard closing questions. One is, can you tell us about a person who has had a profound influence on you?
I'll pick 2 people. There's the foundational personal impact, and I would have to credit my father. Like what kind of person you become, what qualities you value most, and you lean on the most for yourself, honesty, integrity. And then there's the professional aspect. And frankly, Fred Rosenberg, that oversees the broader team, part of the reason, in part where I've been at DB and continue to be at DB, is his contribution to my personal career trajectory, and really learning how to take and own risk, learning how to get things done, and learning how to lead and invest in people.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Unfortunately, there's been a tremendous rise in anti-Semitism in the world. I think something to the tune of 9x over the past decade. And it's also interesting because if you look at the world, there's studies that something like 3/4 of the global population has never met a Jewish person. Yet something like half of the adult population, or almost half of the adult population, has very strong negative views. Because I was born in Ukraine, I first learned about Jewish identity. I wasn't surrounded by a lot of Jews, but I learned about Jewish identity when I was 6 years old and somebody called somebody else a Jew. And I was like, oh, it's great. There's another Jew. And I came home, I told my sister, she's like, no, that was a curse word. You misunderstood. And the first time I told someone, one of my friends, he immediately started checking my head for horns, and I couldn't understand it because he had never met a Jewish person. And so, my personal experiences and combination of what is unfortunately has been happening throughout the world, I've been spending more time, whatever free time I have, on some of my personal financial resources to invest behind educating and supporting the causes of this type.
Wonderful. And if there's any charity, what we like to do is we add the link to our posts. So you can either mention it now or afterwards, whichever.
Sure. There are countless. I'm more than happy to follow up.
Excellent. Alex, I want to thank you again for taking the time. It's been a great conversation.
Pleasure. Thank you for taking time.